If your bank account has money in it, that does not mean your dental practice is profitable. And if your bank account feels tight, that does not automatically mean something is wrong. Most dental practices that are low on cash are dealing with profitability problem, too much in owner distributions, or too many loans. And the problem is this: a lot of dentists look at their bank balance to decide how their business is doing. But your bank balance is not your profit. And confusing the two can quietly cost you hundreds of thousands of dollars over time. Today, I'm going to explain why. A lot of dental practice owners manage their dental practice emotionally based on their checking account. If the balance looks high, they feel confident, they spend, they take distributions. If the balance looks low, they panic, they cut randomly, they delay decisions. But your bank balance moves daily. Profitability reflects performance over time. When you don't have the clean monthly financial statements, you default to cash. And cash alone doesn't tell you whether staffing is efficient, whether dental supplies are under control, whether overhead is creeping up, or whether your practice is truly generating healthy EBITDA. For a single practice, average EBITDA is around 35%. For group practices, average EBITDA drops closer to 17%. Your bank account does not tell you where you stand. If you haven't met, my name is Bhola, and we specialize in bookkeeping and financial reporting specifically for dental practice owners. We help practices get clean, updated monthly financials so ownership can make better decisions with confidence. On this channel, we focus on clear numbers, better decisions, and higher profits for your dental practice. Let's explain this a little bit further. Profit lives on your income statement. Profit equals income minus expenses. If your practice collects $1 million and total operating expenses are $650,000, you're left with roughly $350,000 in EBITDA. That's 35%. That's a healthy performance. Now, let's talk about what affects your bank balance. Your bank balance changes because of loan principal payments, owner distributions, debt service, credit card payoff timing, payroll timing, and vendor payment timing. Notice something important. Loan principal payments reduce cash, but they do not reduce profits. Owner distributions reduce cash, but again, they do not reduce profits. So your bank balance can shrink even when profits are strong. But here's the more common situation we see. When cash is consistently tight, it's usually because employee expenses are about 31%, dental supplies are creeping above 5.5%, lab costs are high, overhead is bloated, or ownership is taking distributions that exceed true profits and not taking loan payments in consideration. Let's walk through two scenarios. Scenario number one, high bank balance, weak profit. Dr. Smith ends the month with $180,000 in the bank. Feels great about it. But when we review the numbers, employee expenses are at 36% when the dental average is about 31%. Dental supplies are at about 7% when the dental average is about 5.5%. Lab expenses are at 7%. Again, the dental average is less than that. Overhead is creeping. EBITDA is closer to 24% instead of the dental average of 35%. So why does the bank account look strong? Because he's spacing out vendor payments. He has not taken distributions in over 6 months. Therefore, the cash is temporarily high. If nothing changes operationally, cash will slowly erode over time. The bank balance is giving a false sense of security. Scenario 2. Low bank balance due to poor profit or overdistribution. Dr. Smith has $35,000 in the bank. She is stressed. When we look at the financial statements, employee expenses are running at 40%. Supplies and lab combined are higher than the benchmarks. Overhead is slightly elevated. EBITDA is closer to 25%. On top of that, she's taking consistent monthly distributions based on what she feels comfortable with. not based on actual net profits. So what's happening? The business is producing less profits than expected, but distributions are staying high. The gap drains the cash. And this has nothing to do with timing. It has everything to do with profitability discipline, expense control, and distribution planning. Our bank account isn't low because of bad luck. It's low because the profit engine isn't optimized, and the cash is being pulled out faster than it's being generated. Here's the key concept. Cash problems show up last. Profit problems show up first. If employee costs drift from 31% to 35%, you won't feel it immediately in the bank account. But over 12 months, that's tens of thousands of dollars gone. If you consistently distribute more than true cash flow supports, you won't notice it immediately. But eventually, cash gets tight. The bank balance is the symptom. Profitability is the cause of it. Here is why this matters for dental practice owners. If you want to be less stressed, avoid unnecessary surprises, open another location, add an associate, or increase marketing, you must understand profitability, not just cash. Single location practices operating near 35% EBITDA have flexibility. Group practices operating near 17% EBITDA have much thinner margins. Those decisions cannot be based on how much is in the bank right now. They must be based on what is our real operating performance. Here is what I will take away. Your bank balance measures liquidity. Your income statement measures performance. Liquidity answers, can I survive the next few weeks? Performance answers, is my business healthy in the long term? Most dentists who feel cash stress are not experiencing a timing issue. They're experiencing either weak profitability, expense creep, over distribution, or loan overload. And you cannot fix those by staring at your checking account. You fix them by reviewing clean, updated monthly financial statements. If you've been managing your practice primarily on your bank balance, it may be time to start reviewing your income statement more closely each month. Clear numbers, better decisions, and higher profits for your dental practice. I'll see you in the next one.